Joining me right now with his thoughts on just exactly what kind of chaos a possible Brexit scenario could yield. We have Peter Morici, economist, also Art Hogan from Wunderlich Securities. Peter, I know you just wrote an op-ed, actually, on foxnews.com detailing why the UK should exit the EU. Is this for economic reasons? Is this for immigration reasons, or both? Explain.
I think it's both. The European Union is incapable of enforcing a reasonable immigration policy. It's demonstrated that. And it's disruptive to British society. Being an island, they can avoid that. More importantly, though, British banking regulation, British trade regulation, the general bureaucracy on business is really weighing Europe down, and England is shackled to a dying man. Britain, fortunately, its heart is its financial sector, and its future is in Asia and North America. Unshackled, it'll basically compete with New York for global markets, and I think the British financial system will do just fine after a period of adjustment.
But that period of adjustment is what everybody's worried about. Art, you know, as you look at investing over the next several months, how big a concern is a potential exit of the UK from the EU?
Well, Trish, I think the markets are telling you right now how disruptive that may well be. You know, 2 weeks ago, the polling certainly looked like Remain was in the lead, and as that gets too close to call, with Leave sort of picking up some momentum here, markets are telling you just how disruptive they think that will be.
We're only down 120. I mean, it's not like we're off 400.
Yeah, well, take a peek at European markets and Asian markets, and take a look at the yield on the German Bund. The 10-year German Bund is reflecting or manifesting just how disruptive we think this will be.
Okay, so you think the debt markets are basically indicating a little bit more than the equity side here?
I certainly think so, and
okay.
I certainly think European markets and Asian markets are reflecting.
You know, I've talked to some investors, Peter, that are even more alarmist than what we're hearing from Art right now. They really think that it could be catastrophic if the British say we're no longer going to be part of the EU. They think it's going to be just a disaster for global markets, which, you know, I look at it and I'm kind of seeing what you have to say on this. I agree that, you know, there are some reasons, immigration, there are some reasons as far as, you know, establishing their own set of rules for themselves that really make it worthwhile. Do you think this is much ado about nothing? Are people overreacting by sending the German bond yields down into negative territory?
Well, I think people that are against it, like the Prime Minister Cameron, are overreacting for sure, because they're trying to save their jobs in their day. And businesses have situated themselves for Britain attached to the EU. But longer term, Britain is better off going its own way in the rest of the world, because it's capable of doing that much more effectively. I'm not surprised to see the Germans afraid of this and their bond market down. After all, Germany's the one country that's been profiting from the euro, and the larger the European Union is, even though Britain is not in the Eurozone, the more it profits from it. My feeling is that businesses will realign their assets. They're not going to move the financial sector to Dublin or anything like that. The city existed before Britain was in the EU,
and they'll be just fine.
Afterwards.
Okay, Art, let's hope for the best.
Yeah, certainly, Trish. Thank you so much for having me.
Good to have you guys, Peter.